We are the Matea Group of Keller Williams Realty. We enjoy the diverse community that we serve and the lifestyle that Maine has to offer. We'll be talking all things real estate and Maine. Welcome to the Maine Real Estate Show.
Welcome, everyone, to the Maine Real Estate Show. I'm your host, Jeff Matea, Keller Williams Realty, the Matea Group. My co-host, Harrison Smith. How we doing, Harrison?
Good, Jeff. How we doing?
Fantastic. The market is just, it's different. I mean, that's what I like about it. It's new every day. Wow, it's pretty crazy. Buyers, just the demand is through the roof. I feel bad for some of them that just cannot find something. They've been waiting and waiting, or, actively like pursuing and then maybe put it on holds, and just everybody wants the same handful of homes. So, securing one, you can only sell to one person or one party is probably pretty frustrating for some.
Yeah, and for those of you who may have missed it, we had the State of the Market show last week. We dove into the market for buyers, sellers, interest rates with Skylar Welch from Main Point Lending. It's a really good show to get a peek behind the scenes of what we're seeing and experiencing in the market every day. But it is a wild time right now. It is very busy. I ran into the recording from getting a commercial lease signed. You're running out of this when we're done.
Onto a walkthrough for a buyer.
There's a lot of activity happening right now.
Yeah, and relocating from way out of state across the country. We're also seeing, the requests are coming in about, well, where are these foreclosures? And we're hearing about, the economy shifting and, interest rates and stuff. But, that's not the case. It's not, we're not seeing prices falling. We're seeing them actually on the incline, increase. And we read that there was that article that you'd mentioned from, was it the Bangor Daily News? Talking about foreclosures?
Yeah, Bangor had it, Portland Press Herald had it. It was a national study that, looking at current foreclosure rates. And we all know during COVID, there were, foreclosures basically were stopped. So we really didn't have any. And the thinking was at some point, when those programs ended, there would be some, and there really weren't. There was a slight uptick, but not great. But we're seeing right now that Maine's actually in the top 10 in terms of best rates for foreclosures. I mean, we've got the fewest in the whole nation.
Yeah, the lowest. It's wild to think. And I saw that list too. It was a lot of rural areas. Right. So I guess, maybe the premise being that people already had equity. It increased. They got more equity, and fairly conservative areas too. And I saw like South Dakota, North Dakota on there, Kentucky, Vermont, Maine, kind of led that top 10. And then just knowing that folks generally stay put in their home. There's not a lot of movement locally. Jobs. I mean, people have retained very low unemployment in Maine. Right. So that's helped. But again, like people didn't borrow against homes. Right. So they maintained that. They kept that equity in the home, or were smart about the borrowing. We didn't, we have our local banks, which is another thing. They're conservative too. So, very fiscally responsible in that article. And I'm sure this is across many of the local banks, which is funny. You have on the national level, how, Sovereign and some others have, I can't remember the other ones, had maybe been a little bit more risky in the, what is it called? The venture capital.
Oh, sure.
And in lending and kind of getting overextended and not well leveraged. Like a Bangor Savings Bank, for example, I saw the article that said they have 19,000 real estate loans, and they had 3 foreclosures on 19,000 real estate loans. 3.
That's crazy.
In their fiscal year ended March 31st. 2023. So that's pretty wild. 3 out of 19,000.
Yeah. And it's stats like that. We get a lot of people asking us, what do you think is going to happen to the economy? Is the real estate market going to crash? And we continue to point to stats like that to say there's really no indication there's going to be a crash here, because first of all, like you look at the states in the top 10, it was Maine and North Dakota, like you mentioned, some of those states. Yeah. Those states experienced some pretty healthy price increases over the last few years. Especially it wasn't like those were flat markets or anything.
No. Yeah, I mean, North Dakota, right? That Fargo area saw that oil boom for a considerable period of time. And then they have extreme weather where it's very, very cold. So not a lot of sales had happened. I know in that, that Q4 into Q1, just talking to some agents in that area. Yeah, it's crazy to think. Yet, right? Bravo to the residents of Maine and folks who own real estate here for being more responsible, at least.
Yeah. Well, and Maine's experienced price increases that are real price increases. Like these weren't like overinflated. This was no bubble here. Like this was real, like supply and demand driven price increases.
Right.
And I say that because we are seeing markets around the country that are actually there are some that are declining.
Sure.
we're definitely seeing some markets decline. The Denver, Colorado's, most of California, Austin, Texas. Those markets are in cases, anywhere from 4 to 10% down price wise, but it's because they were overinflated markets.
Sure.
Where Maine, we're still seeing pretty steady price increases because it is still very much driven by true economics versus just people that are paying crazy prices.
Yeah, people just speculated like, oh, this is got to keep going and going and going, and chased, and then all of a sudden roller coaster comes back down.
Exactly.
Yeah, so it'll be interesting to see what time tells, but we see just inventory. We've talked about that before. Inventory is super low. It continues to come on, but it's not catching up at all to the demand of the buyers. Number of out of state. Some are still out of state coming here. Others have moved here, are renting while they're waiting to find that perfect home, but they've already decided Maine's the place to be, and working remotely allows them to call Maine home.
Yeah. And what's great is I had a chance this week to catch up with David Lichten, who's one of our favorite private lenders here in the area, working for Kennebec Realty Capital up in that Lewiston, Auburn, Augusta area.
Right.
And he works with a lot of investors, a lot of investors that are looking for foreclosures or distressed properties. And, we're not seeing a lot of foreclosures. We don't expect there to be a crash happening. People have great equity. They've got affordable monthly payments. But on the other hand, there are still other forms of distress. And we still do get calls from clients that they don't just need to sell their house. They need to sell it right now. They're looking for a faster exit.
Yeah.
And I'll start off with one we see a lot is really physical distress. And, we work with a lot of clients who maybe have been in the house for a very long time. Maybe it was more house than they're really able to maintain, or maybe they had a situation where, they had some storm damage and they just never got caught back up. Yeah. But we have run into situations lately where we do have clients coming to us that do have physical distress of the home, which means it needs significant repairs that maybe they aren't prepared to do.
Sure. Yeah. And we're going to see, that's always going to be, forever. That's not going to go away because you have, whether you have medical bills or, just we're out of work for a period of time and you might not have been able to fix your roof or paint your house. And so then, water damage happens and we have, some rough weather here, at the same time, right? What you got to put food on the table and heat your home first. So there, or pay a car payment to make sure you can get to work. So that comes first. And so people have let their homes maybe get ahead of, the deferred maintenance can continue. And some of it too is their equity, their financial, level, status is often in the home.
Exactly.
And may not have the best credit sometimes, or like a medical instant, maybe not paying that or having some time away cause the credit to go down, their credit score. So they can't refinance, or they can't take out a home equity line of credit to do some of these improvements. So the house just continues to go down that path of, disarray, deferred maintenance. So
and that really gets us into that second form of distress, which is financial distress. There are situations where there's a job loss, or there's a medical issue, or there is, there's just a mounting series of financial problems that reaches a point where, to your point, a lot of people, the majority of most people's net worth is tied up in their home.
Right.
If you have a big financial situation or big financial issue, sometimes the only way through that issue is to sell the home, take that equity, take care of that issue, and then kind of reset your life.
Exactly. And then, then we couple that with, where do you go next? And some folks like, well, I can't find a place to rent or buy. We haven't had that instance. It's very rare, super rare in my 18 years. We've found them their next home. So they've not gone homeless. It's just, they've got to look at their situation and hopefully improve it financially from where they are to where they're going. And oftentimes like freeing up that equity in the home can, help you withstand that time period to get back on your feet, find maybe a lower maintenance, easier to take care of property. Because we do have older housing stock too. We've talked about
some of the oldest in the country.
Is, so, folks may be living in a house that they grew up in or they inherited from a family member. And so it's been in the family 60, 70, 80 years. And, they even inherit it in deferred maintenance state and picked away at it. But again, that you got to figure out, do I heat my house? Oil prices have gone up. Electricity has gone up, water and sewer may, be an extra cost, but just the labor to have some of these fixes, people get that sticker shock of a quote and say, I need to eat too. I need that car to get me to work. we'll put that off, and then put it off becomes 6 months, a year, 6 years,
Exactly.
and so on. And then it's like, well, now we're past the necessity. It's like, let's let someone else have this problem.
Yeah, we had a good talk last week with Skylar Welch talking about mortgages and budgeting and all that. And really, you need to look at the home you're buying in terms of your overall household budget, what you can afford, because you've got gas and oil and food and insurance and all those other things. And then you tack on top of that all the inflation we've had the last couple of years, and that household budget's been under pressure from a lot of different directions.
Exactly right.
And sometimes, to your point, if I've got to choose between getting to work, getting the kids to daycare, and eating versus fixing the roof, well, I'm going to get to the roof later, and maybe sometimes it doesn't come along, and it gets worse. And that's why we work with a whole slew of potential investor clients, and so we can bring clients that solution if they need something that's going to happen a little faster.
Yeah, that's right. I mean, we always have clients that are looking. We have a team behind on the lending side as well that can help support a buyer that's looking for that property, but also these sellers that say, well, I just need to get this closed and settled, and then they can help on the back ends to help them find someone to, buy a house.
Yeah. And then the last form of distress I think that we see commonly is that I would call it like that life change distress, where it's a job relocation. It is a sick family member you need to travel somewhere to tend to. It's some kind of a big life change. It's requiring you to have to make a move, and make a move sometimes in a time frame where I got to go. Like, I need to pack a U-Haul and get out of here.
Yeah.
And we've had many clients come to us and basically say, here's the keys. I've got to leave. Can you get this sold for me? Because something in their life has taken them away from Maine, and we're more than happy to step in and take care of that.
And this is an excellent opportunity too. We keep saying, right, if you've thought in the next 3 to 5 years that you may sell your home, and then kind of joked with a client over the phone, is the best time to sell your house was yesterday, and then the next best time is today. We're at what we believe is the peak. We've got to be awfully close. Prices continue to climb. We just can't time the market. We don't know when there might be we've plateau, and we just sit here for a little bit until, more inventory comes on to cause prices to dip. Right now, buyers are being pretty patient with sellers, or, impatiently patient, that they've got to find houses. So they're willing to pay more, which bodes well, very, very much so for sellers. We did see, and we continue to see in pockets, areas where a buyer may waive inspections. So that also, some of these homes that have deferred maintenance, just factor that into the list price and disclose all that you can, what you're aware of, such that, the buyer feels comfortable paying what they are going to pay. But you have folks that are handy, maybe folks that do have cash on hand that can go handle these fixes. Not one that we've really entertained. It could be another option is someone going to the property, helping a seller finance a repair if it's like an absolutely necessary item to then make their house more suitable for the market. But again, most of these we see go in as is condition. So that the seller's hands are clean. They disclose as best they can, and then the sale happens. The buyer knows because you've disclosed everything, and now it's their issue to deal with, roof repair, new heating system, maybe some water damage, et cetera.
Well, that's the benefit of having those outlets like these investor type buyers who are oftentimes coming with cash or a private loan from somebody like David. And they're looking to move fast, and they're willing to take it as is. Granted, you take a bit of a discount on the price because they've got to be able to make some money on it too. But they're able to come in and solve your problem fast and take it right out of your hands, very clean, very neat, and get you that solution that you need, where sometimes going in the market can take a little bit longer, and not always do you have that time.
Yeah, it's that ease and peace of mind. You're not having as many people walk through your home and be critical of this, that, and the other. You also have buyers who are pretty savvy and can already, see, and they have like an intuition. They have like an eye for what's that, or what could that be, and if it needs rehab, remodel, some repairs, they know, and they have that cost in their head to just go forward. Whereas just your traditional buyer off the street, well, what's that going to cost? And they might inflate that expense. And then they take that off the price. We were already factored that in the list price, or at least marketing it to our buyers to then just go and say, I will pay you X percentage of what it would normally sell for. But again, like you said, there's got to be a little bit of a spread so that that person that's buying it can pay the hard money loan and points that I know David has shared, and then do the repairs and still have, hopefully equity in their new home.
Exactly. So, again, we're not expecting a crash. We're seeing foreclosures remain very low, but there are other types of distress: financial distress, physical distress, and then major life changes. If any of that sounds like a situation that you're in, we'd love to talk. Confidential, no obligation. We can give you some options as to what we might be able to do to help you with that situation. You can always find us at jeffsellsmaine.com or call in the office at 207-553-2605. And thankfully, a good friend of ours, David, I had a chance to catch up with him this week. All right. I have the pleasure of being joined today in the studio by a good friend of the team and a good friend of mine, David Lichten. Welcome, David.
Thanks for having me, Harrison.
It's good to have you. So, as we mentioned earlier in the show, you are a private lender, and a lot of people hear private lender, they're not really sure what that is. So when somebody says, David, what do you do? How do you describe being a private lender?
I kind of think of it as sort of a tool in your toolbox that fills all the gaps that exist between traditional lending options and pursuing some kind of real estate play, using your own money, entirely your own liquidity, and all the sort of things that occur where it might be a matter of timing, working with a bank, or maybe putting all your eggs in one basket in the sense of tying up all your capital in one deal. Mm-hmm. You might miss out on opportunities. Maybe you're trying to get started and you don't have the cash to do everything. Maybe you don't qualify for lending with a traditional lender. All sorts of scenarios that come up, but we kind of fill all those gaps that form.
Okay. So, obviously in that situation, you work with a lot of investor type clients.
Right.
But as you mentioned, you do have other solutions. So are you working with kind of a non-investor client, or is it primarily just investor type clients?
Yeah. So the vast majority of the lending that we're involved in is going to be with investor types, people that flip houses, builders who want to pursue spec builds,
yep.
And also folks that are looking to acquire an asset that maybe in the present moment, it physically doesn't qualify for financing. Maybe from a cash flow perspective, it doesn't qualify for financing, and they need a bridge to long-term lending, and we'll provide them that bridge to get to a bank. But in general, really the criteria that I look at is there real estate that we can be in a first position on? Does the borrower have a plan that we can hang our hat on? Is that something, whether it's a refinance or a sale, that we feel encouraged by the data that's there? Mm-hmm. And then they're not living in it. It's not owner occupied. And then from there, that's really where we can kind of start fitting it into the services that my company provides. So it's not just the real estate investor per se, who wants to do a flip, any kind of construction. I've done some work in cannabis where traditional lending isn't an option there right now.
It's hard to use that there.
Yeah, maybe there's partnerships that need, there's a dissolution going on, and there needs to be a moment of a lender that can allow for that kind of shift to occur. Those are just a couple other examples, but it's really, any scenario where there's a need for a bridge to be built, and we can get you from point A to point B.
Okay, great. Yeah, and which I can speak from personal experience from using it myself, and a lot of other people I've sent your way, is that it's this marvelous tool that can solve a lot of problems.
Yeah, especially for people that want to grow, that are new.
Yeah, absolutely. And one of the common questions I get when I talk about this is I get people saying, "Well, what is it though?" Like I know what a mortgage is. I go to the bank and they write me up a bunch of docs and Fannie and Freddie and all this stuff, but you're not using conventional loan money. What is a private loan?
So a private loan it's kind of anything that doesn't necessarily fall under the sort of traditional mortgage companies or bank lenders. So for me and the company that I work, I'm technically a private mortgage broker, where I sort of work with a few different distinct sources of capital mm-hmm. to find the best fit for whatever that scenario might entail. And that might be derived from the property type. It could be a flip, for instance, a single family home that's involved. It could be a larger commercial scenario where, say, it's mixed use and office building. It could be a land play as well. And whatever sort of the property type, the borrower's experience might come into play as well. And geographic constraints come in as well. Population density, certain lenders in Maine and nationally, they have sort of rational and irrational likes and dislikes, and what are going to be the scenarios that they are comfortable with to lend on. And so taking those into consideration, I kind of identify who's going to be the fit, both from an ease of use, but also a reliability, who's going to want to do the deal. And taking out of all those kinds of different factors into play, the borrower's experience, property type, location, so on and so forth, I identify where is this going to lead to the greatest success. Mm-hmm. And I work with a lot of high net worth local individuals. So somebody might have an opportunity to pursue a project and they've got a really wealthy family member or family friend or whatever, somebody in their immediate orbit. I can kind of play that role as well. I do also work with national and regional lending companies that are private lenders, and they're not always the best fit in Maine because they tend to have geographic limitations. But then I also do work with some private equity firms that are better suited for larger commercial scenarios where maybe you need to, again, get from point A to point B. Maybe that's leases are expiring and a bank is uncomfortable with the cash flow projections because of that uncertainty. And we can provide them basically with the time to eliminate that uncertainty. So depending on kind of what the situation entails, I will bring in one of those kinds of non-traditional sources of capital to build that bridge.
Gotcha. So just as I'm hearing you describe that, it sounds like, non-traditional sources of capital, that is your high net worth individuals, private equity firms, other, not bank sources of capital, because you're able to go and maybe lend to somebody on a project that a traditional bank wouldn't like, but a high net worth individual looking for a return on their money that's otherwise just sitting in the bank might be willing to take on.
Yes. And so what comes with that is, our lending is typically more expensive than what you would see with a bank. And you're basically paying for the risk tolerance, the aggressive movement, getting to a closing table, without an appraisal necessarily, overlooking maybe issues of credit. We're tending to look at more what is the collateral involved, what's the asset involved, versus, when you go to a bank, you're providing a personal financial statement, they're pulling your credit, you're looking at 2 years of tax returns. And as somebody who's been self-employed, it's not always something where my 2 years of tax returns are going to be something that always excite a bank. Even if my income is great, I might have been at one company and now I'm working independently, whatever it might be. Every situation is different. Banks have their reasons why they're not going to necessarily take on something, or maybe they just can't move quickly enough. In the last 2-3 years, with the way that the market has been with COVID, I have seen an increase in deals where agility has been the reason for going the route with private lending versus going with a bank and maybe missing out on an opportunity because you have a 90-day close. And a seller might not be inclined to look at that.
Yeah. So the nice thing is that, in situations where bank financing either doesn't work because the bank doesn't want it or the timeline doesn't work, or situations where maybe a traditional bank said no, that doesn't mean the deal is potentially dead. That's the problem you solve, is being able to put some of these deals together that aren't necessarily, perfect for a traditional bank or perfect in sense of the timeline. As you call it, a bridge. You can be that bridge to help make things happen.
I'm working on a new deal right now in New Hampshire where the borrowers in this instance have an opportunity to buy an abutting property and they qualify for bank financing. The property qualifies for bank financing, but the seller is not inclined to consider selling to them if it's going to be this 60 to 90-day process, where there's also the added uncertainty that, in the market conditions we've had for the last couple of years, appraisals have been keeping up with the way the market has moved.
Sure.
But it doesn't always necessarily match up. And having a financed offer come into play, where an appraisal is an integral part of that, you might miss out on the deal because the seller is ambivalent to take that offer, knowing that there's this added hurdle in the process from pen to paper on the transaction to the actual closing table.
Gotcha.
Where that appraisal could kill the deal.
Interesting. Yeah, there's all these different types of hurdles and potential, I guess, kind of bumps along the way that, you have the benefit of taking out. Just in some cases, just make the process a lot smoother, a lot easier,
Absolutely.
a lot simpler for both parties, which is great. So one of the things I like about working with you, David, is that you're not just trying to push a loan on somebody. You're very much a consultant. You're very much a support resource of sorts. So can you describe a little bit about your role as a private lender broker and what it's like working with Kennebec Realty Capital?
Yeah, so the consulting component is one part that I have, in the almost 10 years now that I've been doing this, I've really tried to kind of focus on that as sort of a value add component. We think about in services that we're in. What can you bring to the table other than the immediate, can I fund this deal?
Sure.
So if somebody brings me a project that they want to pursue, in the underwriting process, I'm looking at highest and best use. So is the plan that the borrower has in place something that's going to, result in the most advantageous scenario? And that might be a short-term windfall from a sale. It might be long-term cash flow play. When I'm evaluating something, I'm looking at, okay, is there an opportunity to convert this multifamily to condos down the road? Is that going to be an advantageous scenario? Does it make more sense to keep it as a rental? Is this a scenario where by pursuing market rate rents, we're not going to have the most profitable scenario versus using government backed rents? It's always, the last couple of years have been a very interesting period to be in this field because there's been so many shifts and so many markets have changed dramatically, especially in Maine. But I am going to kind of go outside of just saying yes or no, I can do this loan. Here's what the loan looks like. I'm going to try to illuminate what other avenues are out there so that, maybe this borrower who's coming into the situation is thinking, oh, I'm going to flip this house. I'll get my money out. Well, did you know that you've got 400 feet of road frontage and you can break a lot off and you don't have to go to planning board to do that because it's a 5-year window to split, you don't have to go to planning board for something like that. Whatever else I can provide, it might be connecting them with the right subcontractors that they would need for the project. It might be design components. I am not an interior designer or an architect, but if I see components that I think will create a more viable project, a more, profitable scenario, I'm going to speak up on those things. I also, as part of that, if something comes to me and, it's great for me to get deals, but I'm a person who has a very long-term perspective in growing my business and helping my lenders that I work with.
Sure.
And sometimes that means saying no to a deal or encouraging a borrower to go to a bank because that makes more sense for them. Getting every single loan opportunity is great for my income, but that isn't necessarily acting in the best interest of the borrower. And if I can demonstrate consistently that that is something that is a central tenet of my business and what Kennebec Realty Capital does, I might not necessarily get that loan, but I would hope that the message the borrower receives is this is somebody who's trustworthy, an advantageous person to have in my orbit. I want to work with them, and maybe it's not right now, but it's on the next one. I'm going to send all my referrals to them. I want to work with this person. It's great to increase your bottom line in the immediate, but it's not about this quarter. It's about the overall health of the business. And sometimes that means saying no to something or pushing them to another option.
Yeah. Well, and that's one of the things I really like is that I think a lot of people have the perspective of a private lender or a hard money lender as are often mentioned as kind of like a loan shark of sorts. You're just trying to push loans out there, collect your interest, and you don't really care if they succeed or not because you just want to get paid on it. But in reality, you have a vested interest in the borrower doing a good job because that also helps the person who lent the money. Absolutely. And for you, really, you're trying to create the best possible scenario so all parties win, because if somebody loses, really, you lose.
Absolutely. And not only if my borrowers have issues, it can affect my relationship with the lender.
Yep. And
the deals that we might look at that might be on the riskier side that, there are instances where I really need to say in pitching the deal, this is really something that it is on the riskier side, but, I have confidence and I have confidence in the borrower, I have confidence in the asset, and we'll move forward with it. It's extremely rare that I'm trying to run through my memory of ever having an instance where there was a deal that I was looking at where I, had the confidence in the project where I took it to my investors and I couldn't get any one of them on board. Eventually it will come together. The deals that I do say no to 95% of the time, it's me saying, no, I can't help you. I'm sorry. And here are the reasons why, and here's where you can go with it.
Yep.
And there are some borrowers that, will listen to that and they'll take bits and pieces of my advice, and you by no means have to, but I've also seen it where they've gone and they've pushed the deal and they put, all their savings into it and they got it done with maybe another option. And it didn't work out. And I would much rather see somebody, people are very eager to do a deal.
Right.
And, we kind of talk about in this field, analysis paralysis, but at the other end of that, it's being overly eager, and you want to be aggressive, but you also want to counter that with some level of caution. And so I try to play both sides of that. If I think a borrower isn't being aggressive enough, I'm going to say so. If I think that a borrower is being too aggressive, I'm going to say this isn't a good fit for you. You want to do this $1 million flip and you're tying up you're putting all your eggs in that one basket. You're pushing all your chips in the center of the table. Well, why not do, the $300,000 starter home where your out-of-pocket exposure is smaller, you have a larger buyer pool, that prospective buyer on the other end is not going to, lose their head over not having Viking appliances. It's things like that, that
much bigger margin for error.
Yeah. Much bigger margin for sure. And I think people get really caught up in a lot of the sort of HGTV dialogue where they're going to become a billionaire, on doing one deal. And you're all of a sudden, you're a real estate investor and you're, it's hard work. And
it is.
You don't want to see, for me, it's again, not about doing one deal with somebody. It's about building that relationship and doing many deals with them. And sometimes that means delivering bad news and saying no.
Yeah. It's unfortunately, it's the nature of it. Sometimes you've got to be that sounding board to let somebody know that maybe there's a better way, or maybe this just isn't the right one for you.
Yeah, absolutely.
So, all right. So if somebody's listening and thinking, boy, I've got a situation right now, or I may have a situation in the future where I'm going to need something more creative. What is the best way for somebody to get in touch with you?
Best way to get in touch with me is my cell phone, which is my mobile office, 917-613-2130. Not originally from Maine. Sorry.
Yeah.
But you can go on my website, KennebecRealtyCapital.com. There is a form on there that immediately goes to my cell phone. My office number is listed on there as well, which will forward to my cell phone. I am very accessible. Don't call me at 10 o'clock at night, but text me. Yeah. Reach out to me. I do not have any limitations in borrower experience. I work with people that are new. I work with people that have never swung a hammer before. I work with people that don't have a lot of resources.
Yep.
And I'll help. I'll see what I can do.
Awesome.
So yeah, just going back to your point originally on the sort of consultation component. I have a lot of borrowers that I talk with from, avenues like this, where we talk a dozen times before they ever do their first deal. And use me.
Yeah. Excellent. So again, David Lichten, Kennebec Realty Capital, good friend of ours. Thank you so much for the time today, David.
Thank you, Harrison. Thanks for having me on.
Well, that was a great chat you had with David. Excellent resource, hard money lending, and has an eye for real estate and the mind to just run the numbers and get everything going for those people that are looking to buy.
Yep. And I can personally vouch for him. I've used him personally. I've referred a lot of people I know to him. It's a great product. A lot of people don't understand it, so it scares them a little bit, but it really is a great product and helps us solve a lot of problems.
Awesome. Well, thanks again for joining us at the Maine Real Estate Show. You can catch us on themainerealestateshow.com or wherever you download your podcasts. Thanks again. We'll see you next week.